Howdy, folks. Welcome to Liberty Call. Today is Friday, February 23rd, 2023. Hope everybody's having a fantastical day out there. It's a pretty nice day here in Colorado. No sun or no clouds, lots of sun. Also, some good news. My doggy seems to be okay. He just had an upset tummy, did some x-rays, nothing blocked. So, whoo. Anyways. All right. Well, if it is your first time watching Liberty Call, I'm glad you're here. It is a Friday. And if you could do me a favor, if you give me some thumbs up, like, share, subscribe, follows, and press the notification bell. All righty. It looks like the markets were, well, yeah, they lost a lot of steam here in the last little bit. So, anyways, we'll go ahead and take a look at the markets and see how they turned out for today. Dow Jones finished the day up 0.16%, 62 points, closed at 39,131. S&P 500 finished the day flat, up 0.02, closed at 50.88. NASDAQ finished the day down 0.28. At 15,996. The VIX was down today 5.43%. It's at 1375. Canada was up 0.45. Brazil down 0.61. And Mexico down 0.9. Over in Europe, Germany was up 0.28. Same with the UK. France was up 0.7%. The Netherlands down 0.3. In Spain, they were down 0.08. Italy up 1.07%. Switzerland up 0.97%. And Portugal up 0.69%. Again, today, the Russian exchanges were mixed. The MOEX up 0.18, RT up. Let me stop here. They were closed. That's why they were mixed again. So didn't look over. All right. And the Asian markets, looks like the Nikkei was closed yesterday. Australia was up 0.43%. New Zealand up 0.78%. In China, the Shanghai was up 0.55. The Shenzhen Component up 0.28%. China 50 up 0.05. DJ Shanghai also up 0.55. Hang Seng down 0.1%. And the Taiwan weighted was also closed. All right. So that is everything for the markets. Let's take a look for the markets for today. Let's take a look at the markets for the week. There we go. All righty. Let's see here. Starting off with the 20th on Tuesday. Let's see here. Looks like the Dow Jones is going to finish the week up about 1.5%. What it looks like. The S&P 500 up about 2%. The NASDAQ Composite also about 2%. The Dow Transports up about 2.25%, and the Dow Utilities finished the week off up only about 0.5%. So that's the big laggard. Everything else was up about 1%, 1.5%. Like I said, the NASDAQ was up even more. So anyways, all right. So that's the markets for the week. So it was a short week with Washington's birthday celebration on Monday. I don't like saying President's Day. I know I said it earlier in the week, but most of the presidents suck, in my opinion. I mean, Lincoln was terrible. He invaded the South. FDR caused global war in the welfare state here in America. I mean, I really can't point to hardly any of them that did a good job. So anyways, all right, let's move over to the economic data for the week. Starting out with jobless claims. They came in at 201,000. Forecast was 217. Last week's number was 213. Continuing claims came in at 1.862 million. Forecast was 1.885 million. And last week's number was 1.889. So down about 27,000. Let's see here. The U.S. leading economic index month over month contracted at 0.4%. The forecast was a contraction of 0.3. Last month's number was a contraction of 0.2. Existing home sales annualized came in at 4 million flat. Forecast was 3.96 million, and the previous number was 3.88. So since, I guess, November, December, it looks like we've been ticking up a little bit again. So, maybe it's just home building starting to ramp up again now that we're in the new year and interest rates have abated a little bit. Maybe that's the reason. I don't know. I'm not in the mortgage business. Month over month, U.S. Existing home sales grew by 3.1%. Last month, it contracted by 0.8%. The Federal Reserve's balance sheet is currently sitting at $7.582 trillion. It's been ticking down. It had actually from February 8th to February 15th, it had gone up a little bit. and then as of now has gone back down a smidge. So it is, in the long run, it has been trending down, except for this little jump up we had in, what was that, April of last year. So it has, again, it takes forever for the Federal Reserve or the government to undo something that they created. So, they jumped, created all this money in, the summer of 2020, and then, continued to crank it up until it peaked out at about April-ish of 22. So, and again, since it peaked, it hasn't really been dropping real fast. So, all righty. Well, that is all of the economic data this week. It was kind of a light week. The market recap, S&P 500 eases from fresh record high as Nvidia rally loses some steam. I'd say it lost a lot of steam based upon the NASDAQ numbers today. On Friday, the S&P 500 retreated from recent record highs as investors engaged in profit-taking, particularly in the tech sector following Nvidia's spectacular gains. Nvidia briefly reached a market value of $2 trillion after its historic one-day increase in stock market value, driven by blockbuster earnings. Speaking of blockbuster, haven't seen one of those. I think there's like one left in the country. So South Park does a funny episode about that. I think it was like a Halloween episode. Despite warnings from the Federal Reserve about prolonged higher interest rates, Nvidia's surge overshadowed concerns, although broader semiconductor stocks saw mixed performance. Federal Reserve officials remarks emphasizing a cautious approach to rate cuts tempered investors' expectations for aggressive monetary policy easing. The sentiment shift pushed back expectations for the first rate cut to June, with fewer cuts anticipated this year. Goldman Sachs revised its prediction, no longer expecting a rate cut in May following the Fed's stance. Yeah, they keep pushing that back. At first, it was going to be March. What was that? In like December, we were talking about this, that, March, definitely in March, they're going to cut rates. And then, it started to get a little shaky with the, the December numbers, and then definitely in January. And then now they're like, nah, nothing's happening in March. Probably not even the May meeting, or April-May meeting. So June would be the earliest. So that's June 11th and 12th. If it's they postpone till the third quarter, the first meeting in July, and the third quarter is July 30th and 31st. So could be about 6 months before and again, and I said this twice now this week, if the economy is doing so well and everything is fine, why do we need to lower interest rates? Why? They're normal in my opinion. Granted, I'm only 50 years old, but most of my adult life, the Fed funds or the Fed rate has always been 4, 6, somewhere in that range. It just, if you get a mortgage or a car at that time, that's just what you got to deal with. 2% or zero is just insane. All right, Warner Brothers Discovery faced a significant stock decline after reporting larger than expected quarterly loss, or a larger than expected quarterly loss due to challenges in the advertising market and Hollywood strikes. In contrast, Carvana soared on narrowed quarterly losses and optimistic forecasts, while Block saw a notable increase after exceeding revenue estimates and raising its annual profit outlook. Intuitive Machines experienced a surge in stock value following the successful landing of its lunar craft on the moon, a historic achievement. Really? Did they? I don't believe anything that... I don't even think NASA went there at this point. However, Rivian faced further declines after a double downgrade from UBS, citing concerns about diminishing demand in the electric vehicle market. Overall, market dynamics reflected a mix of profit-taking, cautious monetary policy sentiment, and a divergent performances among key companies, signaling ongoing volatility in response to an evolving economic and corporate developments. All right, so that's what happened in the market today. Let's dive in a little bit into our debt. Not the national debt, the private debt people own. So this article comes from Zero Hedge. It's Peter Schiff, household debt highest in nation's history, and it was an interview on Schiff Gold. And he had the interview with Real America with Dan Ball. Not sure what channel that is. All right. In a recent interview on Real America with Dan Ball, Peter Schiff offered a contrarian view on current the current economic landscape, challenging optimistic narratives surrounding key indicators. He expressed skepticism about reported job growth, attributing it to individuals taking multiple jobs amid rising prices and stagnant wages. Schiff also critiqued the inflation report, suggesting that inflation is bottoming out and poised to intensify, contrary to claims of decreasing inflation. Highlighting the disparity between official reports and real experiences, Schiff emphasized record high levels of household debt and warned of potential repercussions of rising interest rates, predicting that they would exacerbate inflation rather than alleviate it. The interview featured discussions on government spending, with Schiff cautioning against additional borrowing given the nation's substantial debt burdens. He criticized the government's approach to foreign aid, stating that the country cannot afford such expenses while already deeply in debt. Schiff's analysis challenged the positive economic narratives propagated by the current administration, suggesting that the true state of the economy is far less rosy than portrayed. I agree. He underscored the disconnect between government rhetoric and the lived experience of everyday Americans, urging a more critical examination of economic data and policies. Overall, Schiff's interview provided a sobering perspective on the economic challenges facing the Republic. I'm not sure why it says nation there, emphasizing the importance of fiscal responsibility and prudent policymaking in navigating turbulent economic waters. And my main man, Jake, back here underneath me just ripped a nasty fart. If you could smell this, your eyes would be watering. Woo! God damn, boy. All right. Yeah. Mr. Schiff, I really like Peter. I listen to most of his broadcasts that he puts out. Yeah, some people are, criticize him for being a bit of, is it Chicken Little? The sky is falling. He can be a little overdramatic when it comes to the consequences, but he's very good at analyzing the data. I mean, he can tell you, this is good, this is bad, here's what's going on. And he can really, comb through the stuff and point out the warts on the, on the people's faces. So, is it going to be as catastrophic as, he alludes to? I don't know. He's trying to sell his gold. And, I understand that. I mean, I like gold too. I just, it's not the be all end all of investing. So, alrighty, last up, this comes from the Mises Wire. The death of easy money has greatly been exaggerated. And this was authored by Brendan Brown. Let's see what Brendan had to say. The notion of the current cycle of politically motivated monetary easing has come to an end is contested, with comparisons to Mark Twain's famous quip about exaggerated reports of his death. Despite assertions of central bank independence and a retreat from planned rate cuts, the broader economic landscape suggests continued political influence on monetary policy, particularly in the wake of the pandemic. Central banks in the U.S. and Europe have taken credit for curbing consumer price inflation. They're taking credit for fixing this when they created the entire problem. It's hilarious. Again, it's like the arsonist fireman who starts fires just so he has extra work. I mean, seriously. Where was I? But critics argue that their policies have actually perpetuated monetary inflation. That's what I just said. Disguised by temporary supply-side boosts, historical precedents such as rate cuts preceding elections in 1972 and 2004 underscore the political nature of monetary policy shifts. The decision to maintain an inflationary stance during the pandemic, despite a loss of purchasing power in major currencies, hints at a political calculus aimed at facilitating government spending and reducing the real value of debt. While some indicators may suggest disinflationary policy, others point to underlying asset inflation, raising concerns about the true objectives of central banks. In the U.S., the renomination of Jerome Powell as Fed chair in 2022 signals a commitment to the prevailing monetary approach aligned with government fiscal agendas. Similarly, in Europe, appointments to key positions reflect political considerations, with Germany playing a central role in shaping ECB policy. As resistance to rate cuts persist on both sides of the Atlantic, two contrasting scenarios emerge: a buildup to financial crisis driven by endogenous risks or intensified asset inflation, leading to further economic instability. The timing and extent of these scenarios remain uncertain, complicated by data issues and systematic dysfunctionality. In summary, the current politically motivated monetary policy could lead to either heightened inflationary pressure or a crisis with implications for global economic stability. The interplay between political dynamics, central bank actions, and market reactions will shape the trajectory of monetary policy and its consequences in the coming months. Yeah, unfortunately, the central banks are not, what's the word? Independent from their governments. And unfortunately, when when our government says, "Hey, Fed, print a bunch of money so we can gloss over all the problems we've just created by shutting down the government for a cold," and then they stand around and like, "Oh, it's a mystery. What's going on? It's crazy." I don't expect. I mean, personally, spend all the money they want. Just run up all the government debt you could ever imagine. Kind of going back to Mr. Schiff's argument about too much debt. When the government's indebted, the people are indebted, everyone's in debt, and I say spend, keep spending. Give $1 million to every illegal who comes across the Rio Grande. Why not? Just give it to them. I'll put my money somewhere else, so it's not going to get inflated like that. But hey, you're welcome to destroy the republic if you want. I honestly don't care at this point anymore. Alrighty, well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. I hope you have a wonderful weekend, and I shall talk to you next time. Adios.